Like myself, and you're interested in some of these relatively newer ETFs that pay out distributions on a weekly basis because you like the idea of getting paid out more cash flow more frequently, to have more cash balance in your portfolio, perhaps to buy even more stocks and ETFs more frequent. But maybe just like me, you're not necessarily sure which one of, if any, of these weekly paying ETFs are worth buying and or adding to your personal portfolio. So in today's video, I wanted to make an overview video going through 5 of the most popular weekly paying dividend ETFs that pay out income on a weekly basis and have for a while now. Now, although some of these ETFs have certain things in similar, they all are very different in their own way also. So I promise if you stick around until the end, you're going to have a much better understanding on some of these new weekly paying assets. So make sure to stick around, drop a like down below, and let's get right into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So the first weekly paying ETF that has gotten very popular over the past several months and has been growing like crazy as far as assets under value is QDTE, or the Innovation 100 Zero DTE Covered Call Strategy ETF. Now, this ETF has been on my radar for a while. I haven't added any more shares into my portfolio as of yet, but let's read on. It says QDTE utilizes a synthetic covered call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the Innovation 100 index. Now, this is going to be one of the main things I want you guys to take away from this video. Even though a lot of these covered call strategy ETFs that do pay out weekly are going to have a lot of things in common, they're all going to track different underlying indexes. Now, I say that that's important because if you don't want exposure to, let's say, the Innovation 100 index and or the other indexes that these different ETFs track, then that's going to be maybe a make it or break it on if or if not you want to add these ETFs to your portfolio. But reading on under overview, it says the Roundtail Innovation 100 Zero DTE Covered Call Strategy ETF, or QDTE, is the first ETF to utilize zero DTE options on an innovation index. It then says this ETF seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money zero DTE calls in the index. This ETF is actively managed. Now, before we read on, I think it's also important to note this beautiful site right here, a 38.9% distribution rate. And keep in mind, guys, as far as I can remember, every single one of these ETFs that we're going to be going through in today's video are offering a nice positive total return, so there's no dividend yield traps here, at least not as of now. Now, it then says income potential. This ETF seeks to generate income through a covered call strategy on the Innovation 100 index, and it seeks to harness volatility. It says sells zero DTE options on the Innovation 100 index and seeks to exploit structural market mispricings. Now, like I said, the AUM for QDTE, for example, has went up like crazy over the past several months. This ETF has become very popular. Now, as far as these weekly distributions go, remember, you are going to get paid weekly. Sometimes it's going to be more, sometimes it's going to be less, anywhere from, let's say, 18 cents on a weekly basis upwards to 80 cents or 86 cents. They're sort of all over the place, but on average, maybe 30, 40 cents on average over the past several months. But also another very important aspect on whether or not you want to buy into something like QDTE, for example, is what has the ETF actually returned since inception? It's been trading for around 0.84 years, and it's returned around 19 to 22%, more or less, with dividends being reinvested. So even though QDTE is on my radar, there's other also really high quality covered call strategy ETFs that also pay out weekly. This is XDTE, or basically the same exact thing as QDTE, only instead of the Innovation 100, now we're talking the S&P 500. Now, like I said earlier, it's going to be very important on whichever of these you choose because they all, for the most part, track different underlying indexes. So if you're a bigger fan of the S&P 500, for example, let's say you like the type of exposure that the S&P offers compared to the Innovation 100 index, then maybe XDTE is good for you. Now, we're not going to go through the entire breakdown of what XDTE does because, like I said, it's basically the same thing, but instead now we're talking the S&P 500. This ETF has a distribution rate around 34.96%, so also very big. Now, as far as distribution history goes for XDTE, we're still talking massive distributions on a weekly basis for an ETF that costs around $50 per share, which is exactly what I think QDTE costs as of right now. These ETFs are paying anywhere from 18 cents to 33 cents, upwards to 60 and 64 cents on a weekly basis. I mean, this is income that's not really found in most other stocks and ETFs across the market, especially not considering these ETFs, at least as of so far, knock on wood, have offered a nice positive total return. Now, to be specific for XDTE, we're talking an 18 to 21% total return or annualized gain, once again, with dividends being reinvested along the way, and this is over the past 0.84 years. But there's even other weekly paying cover call strategy ETFs. We have RDTE. This is the small cap version. Again, the same thing more or less compared to QDTE and XDTE. The only difference with RDTE is we're talking the small cap index, quote unquote. So again, when it comes to any ETF, especially these cover call style ETFs, understand what the underline is and use that as part of how you decide to make your decision. Now, the difference between RDTE and the others is pretty dramatic. We're talking a 74.53% distribution rate. And even though this ETF is relatively new, we don't have all that much data to go off of, as well as distribution history. So far, the distributions have been absolutely massive. Now, again, because RDTE has only been trading for 0.32 years, we don't really have all that much data to look at. But at least so far, so good. Investors would have had around a 10% or an annualized 31% off of their initial investment if they reinvest dividends along the way, making RDTE a very, very popular one already across the income investing landscape. Now, there's two more weekly payers that I personally have had my eyes on. Like I said, I'm sort of leaning towards QDTE and or XDTE as my two weekly payers, just because I like what they have exposure to and I like what they've done so far. But next we have YMAG. This ETF also pays out weekly. This ETF is the YMAX Magnificent 7 Fund of Option Income ETFs. Now, this ETF gains exposure to, you guys, at the Magnificent 7, of course, Apple, Amazon, Alphabet, etc., etc. The distribution rate for YMAG is 83%, and the weekly distributions are massive. 31 cents, 17 cents, 5 cents, a small one there, 17 cents, 27 cents, anywhere from around 20 to maybe 25 cents on average over the last several months. And at least over the last year, which is about more or less how long YMAG has been trading, this ETF has not been messing around. With an investment of $10,000 and dividends reinvested, investors are looking at almost 39% total return or 41+% annualized gain. Now again, say what you want about YMAX, but some of these ETFs have actually done very, very well, especially YMAG being one of them. And even though I'm not necessarily the biggest fan of YMAX and the majority of their ETFs, YMAG as well as the next ETF we're going to look at have done pretty well since inception. Now, this brings me into my final number 5 weekly paying ETF that I have my eyes on, or at least have considered. This is YMAX, the YMAX Universe Fund of Option Income ETFs. Now, this, of course, is the fund of funds. It buys into a ton of different YMAX ETFs and sort of spreads everything out evenly. Now, this ETF has a distribution rate of almost 54%, so it's also massive, and weekly distributions of 18 cents, 24 cents, 13 cents, 12, 23, anywhere from around 20 to 30 cents once again. Now, one thing I will say about this ETF compared to the others is it is pretty diversified. I mean, you get exposure to so many of these different YMAX ETFs all in one fund, which might or might not be pretty helpful. So to sum things up, there's lots of different ETFs out there these days that actually pay income on a weekly basis, which I honestly think is pretty awesome. And even though I sort of feel like a boomer because I remember back in my day, when a stock or an ETF paid out a dividend or distribution on a monthly basis, I would get super excited and honestly a lot of times even ridiculed because it was sort of weird to buy into something based on its payment frequency. But since I started investing, I've always loved monthly payers. I love the idea of getting paid more cash flow more frequently. Besides, I'm building out a portfolio long term, as you can see right here, that hopefully is going to help me pay for things like my bills, expenses. So why would I not want to get more cash flow a little bit sooner to help with cash flow management or just budgeting, etc. Now, even though a lot of these new weekly payers might be a little bit risky in their own ways, I'm very impressed with what a lot of them have done so far, which is why, like I said earlier, I definitely am going to be adding some QDTE to my portfolio very, very soon. But now lastly, before I go, I have a question for you guys down below. When it comes to these cover call style ETFs that pay out income on a weekly basis, you already know I'm going to ask you to comment down below. If you were to have to choose one of the ones we talked about in today's video, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.